Ladies and gentlemen, welcome to FinFluential Media. We have a great show today coming off the heels of a pretty good day in the markets. We're going to talk about what the market did today and how that relates to the economy as a whole. We're going to talk about why the markets were moving today. We're going to talk about the Federal Reserve. We have the FOMC. We're going to talk about what it means for stocks as well as bonds and where do we go next. And then we're also going to discuss gambling.com and how it relates to Evolution Gaming. They report very late in the quarter. They report tomorrow. We got their preliminary earnings and we're going to see what it means for the sector as a whole. But let's dive in. For those of you that are new here, go ahead, subscribe, hit that like button as well. We have 300 subscribers, closer to 500 now, I should say. Guys, we have very few subscribers. It's imperative for you to go ahead and subscribe to help small channels like this one grow. If you don't want to subscribe, hit the like button, hit the notification bell, click all the buttons. Thank you so much. Let's dive in. The S&P 500 up just above 1% today. Pretty good day. You could see the market was waiting here, biding its time. We traded sideways. And when we got Jerome Powell's speech, the market moved up. Now, the rally was supported by stocks of all shapes and sizes. Nvidia up 1%. High beta, Robinhood was up 6%. Coca-Cola fell, so defensives didn't do that good. But even gold rallied today, as well as financials. PayPal up 1.63%, flat at $70. I actually have a call on the $70 mark. So as it is right now, this call is going to expire in the money. But guys, if we look at today and yesterday, this was yesterday's price action. This was today's price action. What a difference a Fed press conference can make. The market added trillions of dollars into the market today because we had the FOMC meeting, the statement of economic projections. And look, everything about the FOMC conference was exactly as we expected. The central bank revised down its expectations for economic growth, revised up its forecast for inflation, and said we're looking to do 2 cuts this year. And the market was like, yep, that's what we expected. However, the bond market, guys, fell. Yields fell. The 10-year yield was down nearly 1%. This is actually a pretty big move for the 10-year yield, and down 7% year to date from the 4.8% range. We're now sitting at about 4.2, just under the 4.25% mark. And this is ultimately what Trump wants, what the Fed wants, and what the Treasury wants. They want lower yields because lower yields is just all around better for the economy. But another reason why yields fell had to do with the Fed tightening as well as balance sheet runoff. They said they're going to slow balance sheet runoff further come next month in April. Right now, $25 billion worth of assets is being let off the balance sheet. That is tightening. It means it's taking liquidity from the market. And they're actually going to slow that pace to $5 billion in April, I think. In the next FOMC, they might even slow that further to 0. And there is a very, very small possibility if the economic data really starts weakening, if the soft economic data we're seeing turns into the hard data, it could be a situation where we actually get QE, quantitative easing, where the Fed will actually go out and buy bonds, further lowering the 10-year yield. So we'll see how this pans out. This is the big reason why the market was so bullish. Everything that Jerome Powell came out and said the market expected. That's actually what I said in all of my previous videos. It was the expectation he was going to leave everything as is, not cut rates, hold the Fed funds rate. But this balance sheet runoff was a surprise for the market, and that is why stocks, the S&P 500, was up 1% or in excess of 1% today, led by higher beta. We're slowly getting through that process where we're going to see the Fed actually really support the market. And this is partly a Fed put to a degree. But guys, let's go ahead and talk about a stock, gambling.com. This is a very interesting stock. I recently came about it. Been doing slight research into it. Not a big fan of the actual business model. It's not a super high quality company. You know, I like extremely high companies with wide moats. I don't think it has that just yet, but I'm doing my research, so things could change. However, gambling.com report fourth quarter earnings tomorrow. They release their preliminary results, and this is actually just a read through for Evolution Gaming. And you guys know I'm a big holder of Evolution. I like the business, one of my highest conviction plays for the next 5 years. Now, Gambling Group announced fourth quarter earnings. They actually released this quite a while ago now, about a month ago. Now, they reported a revenue of $35.2 million that beat expectations, but net income came in below expectations and adjusted EBITDA came in below expectations. Now, Gambling Group is down about 11% on the year, right? But it actually was up 2% today and is up about 4% in the pre-market. So the market very, very excited for this stock to report its earnings tomorrow. They think that maybe because of the preliminary earnings, we could see a slight beat on these numbers, but I think you're still going to see a top line beat, a bottom line miss. Nonetheless, right, this company is actually still growing. You're still looking at like a significant revenue growth in the double digits, high teens, I believe, when it comes to revenue growth. And you're actually seeing significant free cash flow. If you actually look at the full year, free cash flow last year was $16 million. Now it's at $41.5 million. The company is growing very, very well. There's a lot of cost control and unit economics, operating leverage being built into this business because, free cash flow is increased by 132% over this time period in the last year. So, and as a result, on a free cash flow basis, the stock looks very, very cheap. If you just look at the company's financials and go all the way down to the free cash flow yield, it trades at a 6.7% free cash flow yield, roughly the same for an earnings yield. And you can see very good capital ratios, return on invested capital, return on capital employed, well above 15%, return on equity, nearly 25%. And these have actually been increasing over time. That is exactly what you want to see. When you see a company that's increasing the incremental returns on invested capital while actually having quite a lot of cost controls, we saw that with the free cash flow growth. That is significant. The management team pushing all the right buttons here. Now, looking at the overview for the company, now it was up 2.8%. It's actually up in the pre-market 4%, as you can see right there. So a lot of anticipation for this earnings. If we go to the last year, however, the stock is up 43%. But if we actually look at year to date, from its peak $16 to $12, we've seen a significant pullback, and that has to do with their earnings. Their earnings was released here on the 19th of February. The market didn't really like them, and that is why we've seen this. However, it looks like we are putting in a bottom here, and the stock is looking very, very cheap. Like I said before, only 35 million shares outstanding. The company is buying back shares, and it trades on a PE ratio of 16 times 14 forward. If we just go to some of their financials, right, you can see 124 million in revenue. So it's only a company that's about $500 million in market cap. So it's actually a very small company, growing revenues in a very robust way. And if you scroll down to their margins, 91% gross margin, 28% operating margin, 23% profit margin, and most of their net income goes directly to free cash flow. That has been the case for pretty much the entire business as a whole, except where they make some acquisitions. Now, the company is buying back shares. The shares outstanding has changed 3% over the last year. Very, very significant. And then if we actually go to the balance sheet, the company currently has $15 million in cash and short-term investments and total debt of $29 million. So very, very healthy company, a very strong company. I don't believe the business has a moat. If we actually look at what the business does, Gambling.com Group Limited operates as a performance marketing company for the online gambling industry worldwide. It provides digital marketing services for the iGaming and social casino products. Company's focus is on online casino, online sports betting, and fantasy sports industry. Publishes various branded websites, including Gambling.com, Casinos.com, RotoWire.com, and Bookies.com. Now, if we actually go to the forecasts right here, because ultimately what we want to look for tomorrow is what the management team have to say about guidance, number one, and where the industry is going. That's going to be a great read through for Evolution. So this is why we're super interested. Now, the average analyst has a buy and 6 strong buy ratings, 1 buy rating, 7 analyst rating with an average price target of 16.29. That's 30% upside from where we are right now. To the high end of 21, 68%, and the low end we're actually looking at a 4% gain. So the analysts see a very strong risk to reward for this stock here. Scrolling down to expectations. Now we already know what the company reported for the full financial year. If we just go back to this right here, you could see that 2024 total revenue of 127.1 million. Then if we go back to the expectation, the market is looking for 129. Now, revenue actually did beat estimates based on the estimate that was expected when they released the preliminary earnings. So I'm assuming the market is saying, hey, we want 129 now based on these estimates. That will represent 18% growth, 88% EPS growth. And then the company is looking to grow another 12% and 27% sequentially year over year for 2025, 2026, and then 32% and 14% in revenue. So very, very strong growth rates, as you can see right here. And I'm assuming gambling.com is saying, hey, as we regulate and legislate in the US, because there's a ton of states that are looking to legislate this year, we should see incremental growth. And as we expand, we should also see EPS expand. And you could see at $1 in earnings, the stock currently trades at 12 times forward. And this is on financial year 2025 earnings. So this year, calendar year 2025, as I report in that order. So very, very interesting stock. But what does this all mean with regards to returns? Well, I have it right here for you guys. So we go ahead, right, and assume 13% growth in revenue on $127 million, right? So that's actually what they reported. You could see right here, 127.1. For 2024, they reported 127 million. We assume 13% growth every single year to 2029. To be honest, this could actually be considered conservative. Because if we go again back to the estimates, you could see that we're looking for 171 and 195 million, right? Whereas I'm penciling in 144 million, not 171, and 162, not 191. So we're being very, very conservative with our estimates going forward. And then we actually see margins, the exit margin for free cash flow at 28%. Just for the record, for the full year, then free cash flow margin was 32%. So that's super, super interesting. So what we are seeing is actually slight margin contraction, relatively stable revenue growth, and actually revenue decelerating from 18% where it is right now all the way to 13%. Not pricing in any margin expansion. So on $66 million of free cash flow, multiply by the 15 multiple, you get that as an enterprise value. Subtract your net debt. That is your equity value right here. And then you divide by shares outstanding. I'm assuming shares outstanding will decrease 2% every single year up until 2029. They'll have 33 million in shares outstanding. You get a stock price in 2029 of $29 a share. That's the current stock price. They don't pay a dividend yield, and you're looking at an 18.42% compounded annual growth rate over the next 5 years. So very, very interesting when you look at everything like that. Now, I just want to point out that this is an insanely conservative estimate. And here's why I say this is an insanely conservative estimate. If you actually look at 2029, we're penciling in $66 million worth of free cash flow, right? And using a 15 times EV to free cash flow multiple, so no multiple expansion. If we actually go to Koifin, so this is the estimates for 2023, 2024, 25, 26, 27, you can see $127 million worth of revenue going all the way to 211 million in 2027. Now in 2027, we've only penciled in 183 million. That is a substantial decrease, right? And then if you actually look at the free cash flow for the company in 2026, we're looking at 68 million. So in 2026, analysts are penciling in 68 million. We only have 66 million at the 2029, 41 million right here. Insanely interesting when you look at that. And that's because we take the revenue, multiply by the free cash flow margin of 25%. Current margins are 32%. But we could definitely see upside to these figures, especially if the margins of 32% hold through and maybe even expand. I'm putting in sort of like a base case right here. I mean, if you look at the best case, you're probably looking at very close to $85 million worth of free cash flow here for the company in 2029, I would say. And this is an insanely conservative estimate. However, gambling.com, this company doesn't really have a moat, right? And it mostly just runs gambling websites, and that can change, and it's very, very cyclical. And if we go into a recession, who knows? So this is why I built out these conservative estimates right here. Nonetheless, the stock looks very, very attractive. I don't hold the stock, but I'm going to be paying attention to the earnings. And look, if these growth rates that the company is expected to do 16% in 2024, 35% next year, 11% the year up, 10% in 2027, if these growth rates hold true, that's going to bode very well for Evolution and the industry as a whole. But we're going to be tackling the actual conference call in tomorrow's video. So go ahead, subscribe so you don't miss a beat. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.